If your score is under 600, then you cannot qualify for a HELOC on your primary or your investment home. But you can qualify for a cash out refi. So what we did for her is we got her the cash out. We only gave her enough money to pay off her bills. She didn't want anything more. She didn't need any more money. She's doing all right. But she was just every single month when she opened up her bills, not just one, but like 17 of them actually, she got disgusted. I don't blame her. I looked at the interest. It was, geez, half of the cards were in the teens and the others were in the 20s. It was terrible. So we just, through the mortgage, very simply, we paid everything off. And then what happened to her? So my new friend saved $1,593 a month. So what does that mean? What's that over a year? It's $19,000 in a year. Now, a residual impact of that is that the mortgage payment that she is making, well, she's going to be able to write it off now. Whereas before, when she was just paying the loans and the cards off, or not really down, but making the minimum payments basically on them, she wasn't able to write off a damn thing. Now, all that interest, everything gets written off. Pretty neat. So she's saving a lot of money, $19,000 a year. She's writing the interest off. And one more thing. The reason why I'm saying that she just saved $19,000 a year and I didn't go into the 2-year and the 5-year and the 10-year example is because we're just going to refinance this puppy. So what's going to happen with her is now that her cards are all paid off, her credit score is going to shoot. It's going to shoot through to the moon, to the sun, to the stars. It's going to be crazy. So her score is going to completely rebound. It's going to go from the 580s up to maybe the mid 700s. I don't know how high it's going to go, but it's going to go drastically higher. And now this depends a little bit on the market. So if rates stay the same or they get a little bit better, which by the way, we're projecting them to. If that happens, we're going to be able to save her at least 1% and maybe 1.5% when we refinance her next year or the year after. Again, whenever it's smart. I can't tell you exactly when we're going to refi her because we have to see where her credit rebounds to and we have to see what the market rates are at that time. But mark my words, we will be able to refinance her in at least within a year, maybe a 1.5 years, depending on what's intelligent, what the numbers tell us.